All right, who wants to guess which one of us chose our entrance song? No day is complete without a little Jerry, right? I'm Amy Chasen. I'm the Director of Research at Barron. I've been here for about 8.5 years.
And I'm Cliff Greenberg. I run the Barron Small Cap Fund. I'm Co-CIO with Andrew Peck, and I've been working at Barron for 26 years.
Well, I'm Andrew Peck, as Cliff said. I run Barron Asset Fund, which is a mid-cap growth fund. I've been working at the firm for 25 years, and I'm co-chief investment officer alongside Cliff.
Great. Well, good afternoon, everyone. As you know, the theme of this year's conference is Own It, and we thought the best way to illustrate the meaning of Own It was to ask several of our portfolio managers what Own It means to them. So take a listen.
A little bit of a unique perspective on Own It because I come from a place where nobody owned anything. I was born and raised in Russia, and there wasn't any ownership of anything. And I love owning things. I think if you think of owning versus renting, majority of investors really rent companies. And they have this mentality where why you're going to buy it, how long you're going to own it, and when you're going to sell it. We do not have a sell date. I think this long ownership mindset is really a fundamental tenet of our philosophy.
I'm a long-term investor, and owning it means trying to identify a great company and owning the stock of that company for a very long period of time. Many talk that that's their approach, but not many people actually execute.
Own it means to me, honestly, be a long-term investor. Think about the total return that you're going to get over a company over a long period of time and not what you can get in the short term. For me, in the funds that I run, Own It is to find major secular trends that are going to last many, many years. I call them generational shifts.
When I look at one of our competitive advantages as a firm, if you think about other stock market participants who are really focused on daily performance, weekly performance, monthly performance, the fact that we can take a 5-year view really differentiates us.
You can't predict what's going to happen from day to day. It's pretty much a fool's game. So what you want to do is really dig into the fundamentals, understand the competitive advantage of a company, and understand what is really going to be driving revenues and ultimately the cash flow of the company over the long term.
Own it is really having faith in your winners and also owning your mistakes. And if you make a mistake, no one's perfect, everyone makes mistakes. Own those mistakes, sell it, and put it into something else with higher conviction.
The merits of long-term investing are about knowing companies extraordinarily well. We're not trying to focus on what a company's going to do next quarter or next year, but really what's the vision of the business? What can this actually become over time?
We're working hard to try to identify businesses that have compelling long-term secular growth opportunities, sustainable competitive advantages, run by great management teams. It's not easy to find businesses that meet all of those criteria, and when we do, we own them for a very long time.
Management teams want Barron Capital as their shareholders. Why? Because we take a long-term perspective and want to own their companies and don't just view them as stocks.
We can really remain focused on the quality of the business, the duration of the growth opportunity, and really take the long-term vision. It really puts you in a strong position to take advantage of market volatility or disruptions that might happen in the near term when they really don't impact the quality and the long-term opportunity.
So as you can see, for the portfolio managers, Own It is a catchphrase that means long-term investing.
What else does Own It mean to both of you as co-CIOs?
Well, Cliff and I took over the role of Chief Investment Officer almost 4 years ago. The two of us serve as sounding boards and mentors. We work with all the portfolio managers to ensure that we're all following the same underlying investment process across all the funds that we manage. This remains true across all market caps, sectors, and geographies. And we'll elaborate on this process throughout the rest of the presentation.
And me, I'm his partner in crime and do as I'm told. But try to impart some wisdom based on my many years in the trenches. Amy, in your role as research director, what does Own It mean to you?
I'm interpreting Own It in this context to be accountability. So as Director of Research, I'm responsible for managing our team of 26 research analysts and ensuring that each of them is performing the type of deep dive fundamental research that we expect at Barron. I'm also responsible for hiring our new analysts, helping to integrate them into the team, and I also conduct performance reviews with each of our analysts twice a year to ensure that they're continually improving. So that's a quick version of what I do every day.
Cool. We now turn to a section about our unique investment process. We focus on identifying special companies, meeting super talented and dedicated executives, and doing deep fundamental research to gain conviction to make large, winning, long-term investments that we can hold forever.
Great businesses are made by great people managing those businesses who are able to identify truly compelling markets that have attractive long-term secular growth characteristics associated with them, that are run by great management teams, that have compelling competitive advantages surrounding them.
What you do is you water your flowers and cut your weeds, which basically means if you identify a fabulous company that you think can be a long-term holding and make great returns for a decade or more, well, those are your flowers and you really want to take care of them. You might sell some of them over time if they go up and for portfolio management purposes, but those are what you hold dear to.
The benefit of the compounding over time is something that I think we do as well or better than anyone. And I think that's only possible when you really know the companies and believe in their competitive positioning and market opportunity.
To develop an investment thesis, it all comes down to fundamental research. Is it a best-in-class company in terms of a great business, a great management team, a good balance sheet? Does it have a competitive advantage that's sustainable? How is this company going to be able to continue to do what they do and do it better than anybody else? Is the growth opportunity compelling, not just in the near term, but in the long term?
We're looking for companies that operate in large and growing markets, that have a very differentiated product and have very strong management teams. So it's very simple, but there's a lot of work that we do in order to understand each one of those kind of variables, if they are high quality or not.
In most industries, competitive advantage boils down to three things. One is customer captivity. Do people want to use the product? Is it going to be very difficult for them to switch away? Two is economies of scale. Does the company have to be much larger to do this profitably? And three is, does the management team recognize that competitive advantage, and are they going to allocate capital in a way that increases that advantage over time?
ESG analysis is an important part of long-term investing because over the last decade, the risk landscape and the opportunity landscape has shifted quite a bit to the point where natural and human capital factors are much more important in determining the outcome of successful businesses. And it's important for companies to manage these factors successfully.
Great. Great. So as you've heard, we invest in businesses that are competitively advantaged. This means they're doing something that most others cannot. They're providing some sort of product or service that can't be replicated, regardless of how much others choose to invest. Good examples of these businesses are two that we heard from this morning, CoStar and FactSet. They're very different businesses, but they share a common characteristic. Each has compiled a proprietary database over the span of several decades, and it would be virtually impossible for a newcomer to replicate the historical scope and breadth of those databases.
AP, no mention of moats? You always talk about competitive moats. They got me on film for my water the flower shtick. That's Jewish, you know.
Don't worry, moats will be back next year. Can only go 1 year without moats.
Let's next hear from some of our analysts about some of the particulars in their research, in our in-depth research process, their perspectives on the key attributes they are focused on, and how they go about getting a deep understanding of business fundamentals.
from anywhere and everywhere. It could be attending an industry conference, it could be attending an investor conference, it could be reading articles, it could be talking to our companies and asking, which competitors they respect and admire the most.
Better recognition means we identify areas that have generated great ideas and then look for other companies in similar areas, right? An example would be investing in Amazon and then finding Mercado Libre, which does e-commerce in Latin America, and Coupang, which does e-commerce in Korea.
For the most part, as an analyst, your role really is to be the expert in the industry that you're covering, and that requires having sort of an in-depth knowledge of sort of the drivers and what are the things that are affecting companies in the industry.
I want to read everything I can about something before I feel like I really have an understanding of what's going on and what the implications of this new innovation is. I want to get the big picture, zooming back out and seeing the forest, summarizing what the investment thesis would be.
When we think about ideas for the Emerging Markets Fund, all the analysts really travel a lot, whether it's China, Korea, India, to really meet with the management teams, understand what's happening on the ground.
You'll see other companies just look at another company on paper or on the computer screen, but we really spend time in the field speaking to people and speaking to customers, competitors, and management teams.
That is the part of the job that requires experience and depth of understanding of the backgrounds of the corporate managers, asking them questions to understand their strategy for the businesses that they run. How well do they articulate the uniqueness of the business? How well do they articulate the growth potential for their business?
I think our process is unique in the sense that we're really looking at with a multi-year time horizon. Other investors are focused on the next quarter. We're focused on what a company can become in 4 or 5 years, and then 4 or 5 years after that.
Very few people, very few institutions own stocks for more than a quarter or two at a time. So by owning stocks for, in many cases, decades at a time, I think we're even more differentiated in our approach than we were 25 years ago when I started.
We really take a long-term approach. We visit all of the companies that we invest in. We spend a lot of time with the management teams. We spend a lot of time in their facilities, spend a lot of time really getting to know them.
I think we have a discipline at this firm that essentially says patience is a virtue, do the deep work, and then believe in your conviction.
We try to meet companies early, so try to get to know them as private entities a couple years before they try to test the public markets.
The great thing about being a Baron is we don't have to time it. We can be a little bit early because we know it will happen. And that gives us a huge competitive advantage in being able to be long-term investors and reap the benefits of, not timing it.
So that gives you a sense of the type of in-depth, detailed research that our research analysts are conducting every day. Our investment team is now 45 strong. We have 17 portfolio managers, 26 research analysts, myself, I'm the director of research, as I said earlier, and Jamie Stone, who's our director of ESG research. Our research analysts are organized by industry, with the biggest teams being in technology, healthcare, consumer and industrials. And over time, our analysts become experts in their areas of coverage, and they're charged with knowing their sectors and the companies within those sectors better than anyone else on the street. And our industry teams work closely together to share thoughts and ideas on a regular basis.
So, as you know, people are at the core of our business, and you've often heard us say that we invest in people, not buildings. Take a listen at what our analysts have to say about this.
By being long-term investors, it allows us to build a longer-term relationship with CEOs and CFOs, and they speak to us more frequently about those competitive advantages.
We do continuous research. We meet with management teams in our office or at a company headquarters. We go out and visit companies. We speak with key opinion leaders to assess whether or not our initial thoughts about the company and their prospects are correct.
I would argue we probably spend more time with management than any other firm across the street. And a lot of that is because we oftentimes do talk about long-term strategic planning and things that the management team likes to discuss. We allow them to share with us their visions.
We like
founder-led companies run, especially sort of trained us all to try to invest with people that view themselves as owners of their business because their incentives are likely to be aligned with ours.
We are truly investing in businesses. We are not just picking stocks. We are identifying visionary leaders.
So, as you can see, we don't pick stocks by just staring at screens and spreadsheets. A key part of our process is working hard to identify great executives like those we heard from this morning. Hopefully, everyone got a sense of the remarkable intellect, passion, and character of the CEOs that run the businesses we invest in. Another key part of our research process is working to ensure that all the portfolio managers get the benefit of the enormous brain power and experience spread across our 45-person research staff. Let's hear a bit more about how we do this.
We're here as an analyst, and Ron and all of our portfolio managers consider themselves analysts in addition to portfolio managers. I think it's critical to our process and critical to our conviction to work hand in hand with analysts, whether it's sitting in meetings together, around the table with, 5 or 10 members of our team, or taking a due diligence trip to visit a company.
I've been at the firm for close to 25 years, and I've watched the firm's research group grow dramatically over that period of time. The way we're organized is by industry specialization rather than by product or team specialization. So what that means is that I, as someone who's managing a diversified mid-cap growth portfolio, have the ability and the benefit of interacting with virtually everyone on our research team, depending upon the overlap in that individual's area of research and expertise and my level of interest in that area at any particular time.
When I'm going to a meeting with a management team, it's not just me. There's anywhere from 3, 4, 5 people. We've got all different folks asking questions, portfolio managers, analysts. Everyone is trying to get to the bottom of it. It's just a very collaborative work environment.
We have an extraordinarily collaborative approach with the investment team. There's a constant back and forth trying to ascertain what is a Baron Capital type investment. There's never one interaction, it's continuous. Multiple people in the meetings asking various questions and trying to get at the heart of what makes this business unique and special.
It's the ability to leverage the wisdom and the experience and the expertise of all the analysts across the Baron platform. I think that really puts the Baron international and emerging market and New Asia strategies, in an enhanced position against its peer group.
The interaction between the PMs and these younger analysts is really critical because it very quickly teaches the analysts how the PMs think about companies, and it helps ingrain our process in them as they're learning the business.
There's no bureaucracy at Baron Capital, and we very much believe in intellectual honesty. If you just tell me what I want to hear, you're not adding value. And so we collaborate. It's an open door policy.
People are very supportive of one another. As you might see, there's a lot of glass here, so we can see what people are up to and just walk in and ask for ideas, ask for help, ask for direction.
It's an iterative process, so it's great to sit down and say, this is how I'm thinking about a business, and it's always met with more questions and more work and the next iteration. That's how we all grow as investors and really get to understand businesses.
We have a truly diverse team of investment professionals that have expertise along different geographies and different industry sectors. Having the sounding board on the team is extremely important when developing a thesis.
And that's what's great about working at Baron. It's not siloed, but it's really a meld of the minds and trying to come up with the right questions to ask, the right approach to learning more about these businesses, and then building that conviction that we're on the right track with these companies.
So I want the hawks and doves on any company or any industry to have different opinions, to challenge me and challenge each other. And I have always believed this type of collaboration, this type of debate has led us to making better decisions in our portfolios and have been reflected in our returns.
Well, we have a tremendous group of smart, tenured, and dedicated portfolio managers and analysts. We work together, we help one another, and through this collaboration, we make the best decisions for our shareholders. And together, we've made some fantastic investments. Let's now hear about some of our big winners from our portfolio managers and the importance of those stocks to the success of their funds. We've owned in the fund and still own is a company called TransDigm, which is the manufacturer of proprietary aerospace parts. I purchased this stock in 2006 when it came public at $1 billion market cap. And if you can believe it, its present market cap is $50 billion now. The company has grown from about $400 million in revenues when we purchased it to close to $7 billion now. We've made about a 30% compounded rate of return owning this stock for 16 years straight, which is really, really terrific. And this one stock has contributed about $500 million of profits for our fund over time.
One that stands out to me is Eurofins Scientific. I remember meeting Gilles Martin, the CEO and founder, sitting down with him in the early days of the fund, and I mean, it just struck me as this is a Barron CEO, this is a Barron founder, entrepreneur of a business, really high quality business. And he came to me in the first meeting talking about how he was in an investment phase of the business that was going to set up for enormous value creation down the road. Many investors were taking a short-term view and looking at the near-term dilution that was presenting to the current earnings stream. And I was able to sit back, take that long-term view, and I've owned it now for nearly 13 years. I think it's compounded at 20% per annum.
A great example from my portfolio that we've owned for a long time is CoStar Group. We've owned CoStar for about 22 years, as long as I've been at the firm.
Gartner is a company we've owned since 2007. It's the largest provider of research on the information technology sector. When we came across Gartner close to 2 decades ago, what was compelling to us about the business then remains as compelling, perhaps more compelling today. And that is our belief that consumers, businesses will be spending more on technology each and every year.
Equinix, which is the leading real estate data company in the world. We started buying that company when we launched the Barron Real Estate Fund, now almost 14 years ago. It was a top 10 position then. Fast forward to today, almost 14 years later, and it's our second largest position in the Barron Real Estate Fund.
Vail Resorts, we started purchasing that in 1996 at around $20 a share. 27 years later, it's now at almost 250. I think it's about a 15% CAGR if you do the math on that.
Amazon has been our largest position for a number of years. I've actually owned it since 1997. The value of the company has declined by over half on 5 separate occasions. So 5 times this company has been halved. And yet, I think our return on Amazon has been over 4,000%. That's over 12 years, which gives you an annual average return of over 30% per year.
MSCI has been owned since it came public in 2007 or 2008. Over the last 15 years, MSCI has probably compounded its earnings at 20% annually, and the stock has similarly followed that trajectory, compounding at 20 or 21% annually. We remain optimistic that the next 10 or 15 years will be as compelling.
We started investing in Charles Schwab back in 1992. Over 30-year history with this company. It was an extraordinarily different business then than it is today, extraordinarily smaller. Today, they have $8 trillion in assets out of a $60 trillion potential market. We still feel there is plenty of room to grow.
Our longest term investments and our significant investments are the ones that have really contributed the most of the returns in the portfolio. So we looked at our returns and we have 8 stocks that have accounted for about 25 to 30% of my portfolio. The average holding period there is about 11 years. On those companies, we've made 25 times our money or a 35% annualized return. And I think the contribution to total returns for the portfolio is somewhere in the 40s.
All of our top 10 positions, which are in excess of 50% of the fund, have been owned for over 5 years. Many or all have been owned for more than 10 years. All started as very small positions, 50 or 100 or 150 basis points, and have grown into very large positions.
A lot of the stocks that we've owned for 5+ years, the average CAGR over time for those is 20% a year.
I have tried and succeeded in finding some companies that have been sensational big winners for the fund. 11 stocks have appreciated over 500% during our holding period. Those stocks have contributed about $3 billion of profits for our fund. And just those 11 stocks over the life of the fund have almost contributed half the profits that we've made over the life of the fund.
The vast majority of profits in the fund that I manage, Baron Asset Fund, are attributable to a fairly narrow set of companies that we've owned in many cases for a decade or more. So that really speaks to the value of long-term.
Got cut off there.
We've had some great success making terrific long-term investments. Here is a list of 31 stocks that have appreciated at least 10 times since our purchase, which is pretty cool. These big winners are held across many of our portfolios and are the source of our strong long-term performance.
The 31 10-baggers that we've owned have compounded at 25% annually, generating $22 billion in profits for our mutual fund clients. And these same stocks are responsible for 57% of our clients' gains. Everything you've just learned about our process flows from our fearless leader. So to close, let's hear a little more about Ron's influence on our research process.
Is amazing in that not only is an eternal optimist and a believer, but he also invests in people and he wants you to learn.
He has real guts or courage. That's probably a rare quality, and it's something that he certainly has taught me.
He's very optimistic about the human ingenuity, the innovation. He's really looking forward to individuals that can solve some of the toughest challenges that presented to mankind.
I've learned the value of being optimistic, not just thinking about what could go wrong at a particular business, but thinking about what could go right.
I've only been here a year, but the most important thing that I've learned from Ron so far is just the sheer intellectual curiosity and to always be questioning.
Question everything. You ever sit in a meeting with Ron, you will see that he does not run out of questions to ask. And I think it encourages us to always be curious intellectually and to look for new things that we might be missing and not assume that we know everything.
I've obviously learned a lot from Ron, from my dad. He's constantly been trying to instill upon me, David, and the entire investment team what it means to be a Baron Capital type investment, what we're looking for. And it's not just about the top line growth, but it's about what makes a company unique and special. Why can't others duplicate what this business is, and why will they be able to achieve their long-term vision?
One of the things that I think is so interesting about how Ron invests is it's not just about how someone thinks about their company today. He wants to know what drives these CEOs and business leaders. He wants to know, like, what was your high school job? Like, what did you do differently in that job that was unique? It's about the path of how they got to where they are today and what that's going to mean for how they continue to run the business.
And then understanding, what management's drive and motivation are, and, something that Ron likes to always instill in the investment process is you want to know that management has skin in the game.
And so that's what we try to do at Baron, really invest behind the right management teams. As Ron always says, we invest with people, not buildings.
One of the biggest lessons is the concept of we. When we are invested in a business, our questions are different, and we are acting as a shareholder. We are a long-term investor in a business, in this company, and it's okay to use the word we. What are we doing about innovation? We are part of that shareholder base, and therefore part of the company is ours.
One of the biggest lessons I learned from Ron is that long-term investing is very hard mentally, but very easy from a structural perspective. Once you build conviction in the opportunities with management and the TAM, yes, you need to do a lot of work to build this conviction, but you need to remain very calm and relaxed when the stock is moving very aggressively throughout the years.
Ron has created a firm culture that allows us to think about the long term. He does talk a lot about how if people are worrying too much about market risks or external events that you can't control, it causes you to act in ways that are self-defeating.
Ron is very good about kind of blocking out all the other noise and thinking about over 5 years, over 10 years, is this person going to be a good steward of my capital? And the rest, he doesn't waste his time thinking about.
We are long-term investors, but we are very much not buy and hold. We are buy, hold, and constantly verify. And this is, I think, my biggest learning from Ron.
The investment approach has been very consistent from the day I got here, and it permeates all the way through
Ron down to senior portfolio managers, to junior portfolio managers, to senior analysts, to junior analysts. It's part of our DNA, and it hasn't changed in the 23 years that I've been here, and I don't believe it'll ever change going forward.